Well, star stock picker Cathie Wood runs one of the hottest asset management firms on Wall Street, and one of the best performing ETFs around over the past year. The last 3 years, 2020, over the last 3 years, she's seen huge gains, but 2020 was a big year for her firm after assets under management surged from $3 billion to over $34 billion. She's hot on names like Tesla, major Bitcoin bill. Cathie Wood, CEO and Chief Investment Officer at ARK Investment Management, joins us now. Cathie, thank you so much for being with us. You know, you used to come on all the time, and then you had this explosive year in 2020 that's earned you nicknames in places as far away as South Korea as the money tree, but has also garnered, if I can call it any other way, haters out there who, look at your methodology, look at the stocks that you pick. Just on a personal level, what has this year been like for you? Because you haven't really changed your approach and what you talk about, but boy, has momentum really come to you in a big way.
Yes, well, this year we started off very strongly. Innovation was on a hot streak, continued from last year, and then as interest rates nearly doubled over 1 quarter time, there was this fear of inflation and high valuation-oriented stocks, and so we were hit with a bout of volatility. And you're absolutely right, Amber. Nothing has changed for us. So what actually happened is, if we use our 5-year price targets, instead of expecting a 15% compound annual rate of return, no promises here, compliance will be happy that I say that, instead of 15%, which is where we were at the peak in February, we now believe that our portfolios will deliver closer to 25% compound annual rate of return. Again, no promises, but all I'm saying is the bout of volatility did not change our price targets. They gave us a great opportunity to concentrate towards our highest conviction names.
Talk to us about the methodology of those price targets, because 5 years is a long time, especially for a company like Tesla. You've got a $3,000 price target in 2025. I mean, just using basic CFA modeling, how do you arrive at that? What is your methodology to get to these numbers with companies that are new, unproven, and working in completely new areas that didn't exist a couple of years ago?
Right. Thank you for that question, Amber. Our research starts from the top down. We take a white sheet of paper, first principles research. How is an autonomous vehicle going to work? That was a question we started with in 2014, for example. And what we are doing is following these new technologies, and in this case, first, breakthroughs in battery technology. And we're trying to figure out, are we at the point where the technology is ready and the costs are low enough to launch an exponential growth trajectory? And in the case of electric vehicles, for example, with Elon Musk's advances in battery technology, particularly battery pack systems, and now batteries as part of the infrastructure of the car, we see costs dropping to such a low point that in 5 years, the average electric vehicle, we believe, will cost $18,000, that's US dollars, compared to a Toyota Camry, which will still cost somewhere in the $25,000 to $26,000 range. So what we think we're going to see is exponential growth in the auto sector when it comes to electric vehicles for the first time in 100 years. Autos have been in a very mature state. This new technology is causing exponential growth in a sector that most people think is very mature. So it's a different way of thinking about the world, looking for these new exponential growth opportunities, modeling them out, seeing how fast they are likely to happen as costs and prices fall.
Your view on Tesla, perhaps more than any other, evokes a really visceral response. And I know you go back and forth with Elon Musk on Twitter a lot. I'm curious, what kind of access do you have to Elon Musk? Are you talking with him about these ideas? Are you a distant admirer? What is this relationship like between you and Musk?
I think people would be very surprised at how little Elon Musk and I talk. The first time I had a one-on-one with him, for example, was March of 2019 when we did a podcast with him. He liked what we were doing in our research. We push our research out into social media. He saw some of our research on battery technology and autonomous vehicles, and he DM'd our analyst. He didn't DM me, he DM'd our analyst, rightly so. And she, Tasha Keeney, automatically DM'd him back and said, "Can we do a podcast with you?" So that's the first time we met. And we've talked very few times since, but we know he responds to our research as we're pushing it out there. There's no selective disclosure on our part, and there's no selective disclosure on his part because we're out there on social media talking about these very exciting new technologies.
All right, let's talk about the new shiny object today, which is Coinbase. The reference price is $250 per share. We're getting indications that it could open at $340 per share. Do you have a price target for Coinbase?
We do. I am reticent to give it. It is far above where it's going to open, we think. Now, there are a lot of assumptions in there, and you want to talk about volatility, just look at a chart of Bitcoin. So there's going to be there are going to be great opportunities between now and 5 years to buy on dips, we believe. I have no idea where it's going to open. We were trying to figure that out ourselves today. We do believe, however, that it has miles to go because institutional interest in Bitcoin alone, which is the largest cryptocurrency out there, is, we think, going to add up to $500,000 to the price of Bitcoin. And when I say that, we've based this on a study focusing on what institutions are looking for. They're looking for low correlations of returns. This is a new asset class. So institutions are interested, they are moving in. And if they add up to 5% in their asset allocation to Bitcoin, that alone could be up to a $500,000 increase in the price. So we're at the very beginning of what we believe is going to be a long and exciting journey.
Okay, let me see if I can prod you a little bit more to give us specifics on a price target for Coinbase. You're reticent to maybe give us a number, but can you give me a ballpark on the percent gains that you think you could see, using your 5-year approach?
This is well above our minimum hurdle rate of return of $15, even if it does open. I mean, 15% per year, even if it does open as high as $250 or $300, even at those prices, given our assumptions. Now, again, we expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is. It makes most of its money on the trading of Bitcoin and Ether. Those are the two biggest, and it's going into a lot of other cryptocurrencies and crypto assets. So it's got a lot of open-ended opportunities, but right now they're making about 70 basis points on each trade, on each dollar traded, and we think there will be fee compression, as there always is in the institutional world, and as competition increases. So I think the opportunities in this stock, to the extent there are dips out there, will come around the idea of, oh my goodness, how much is competition going to drive these fees down? And we do think the compression will be to 50 cents within the next 5 years, or 50 basis points. So you'll watch the dynamic: volume explosion, fee compression. Again, we'll pick our spots around volatility.
So it sounds like you're saying this could be a more buy the dip opportunity, and that you wouldn't necessarily be chomping at the bit to get in at the IPO price.
Well, we're not allowed to say what we are or are not going to do at any point in time. You'll see our trades at the end of the day. And so you'll know what we've done, but we can't tell you what we're going to do. but as if you do watch our trading, what you'll understand about ARK is we're extremely opportunistic. We'll buy the dips, and we are also at the same time very optimistic about how far Coinbase has to go in terms of delivering returns relative to our 5-year target. So stay tuned.
All right, stay tuned. Does it have 4 digits or 5 digits, the price target?
Well, if we're right on where Bitcoin is going, just Bitcoin alone, based on institutional investors getting involved and based on institutions diversifying some of their cash into Bitcoin, it has a lot of room on the upside.
Okay, all right, I'll let that one go now. Some of the other things I want to focus on, because you talk so much about innovation and that's really front and center looking at these disruptive things, how often do Canadian companies screen and come up for you? Our tech darling here is Shopify. Do you have any thoughts on that particular name or other stocks within Canada that screen favorably when you're looking at the innovation lens?
Yes, Shopify is in our top 10 in the flagship fund. We're very excited about social e-commerce. Shopify is one of the biggest and most important plays on social commerce, much better play than Amazon. We're trying to figure out how Amazon is going to deal with this notion of individuals seeing something on Instagram or elsewhere on Facebook or on Twitter or on Snap and just buying there. That's a Shopify-enabled commerce opportunity, and we think it's going to be big. We see, of course, TikTok doing the same thing, lining up with Walmart. So we think it's going to be a pretty explosive space. We know Shopify is a very expensive stock, but because of these viral networking opportunities around commerce, we think it's the most exciting one probably out there, because Shopify doesn't care who wins. It's going to be involved with many, if not most, of all of the sites that are going to be powering up commerce.
It's interesting you bring up Amazon, because every day it becomes more and more apparent that these two are rivals, although Shopify used to go to great pains to kind of separate itself. Do you think there is a day where Amazon really views Shopify as a huge competitor? Do you think it could grow to the size and scale of an Amazon?
We do. And I think the question will become for Amazon, if social commerce is going to continue to take share from e-commerce, what is Amazon going to do to insinuate itself into this business? It doesn't have a social network itself. It would have to be more on the back end, again, fulfillment by Amazon and so forth. I think what will happen is Amazon, and Jeff Bezos has always said that he thinks AWS could be as big as retail. But what he doesn't say is that AWS, so Amazon Web Services, which is a technology platform, is going to be so much more profitable than retail. So Amazon and Shopify will probably, I don't think they'll be meeting eye to eye.
I want to ask one last question. It's about your latest launch, which is the space exploration ETF. And I gotta say, a lot of the holdings kind of raised my eyebrows, because I don't think of them as space stocks. Trimble is a GPS company, Boeing airline company, Lockheed, huge industrial. These are not stocks that strike me as ones that move on any space-related news. What do you say to people who say this is not truly a space ETF, because these are companies that are not going to move based on what's going on in space exploration?
Well, we don't believe that the big needle movers in terms of revenues for companies is going to come from space exploration anytime soon. We believe that low Earth orbital businesses are probably more relevant. We think mobile connectivity, connecting the 3 to 4 billion people who do not have broadband, is going to be a $40 billion revenue opportunity. We believe that hypersonic flight, getting at the Boeings and the Lockheed. Sometimes you need big companies to deliver big ideas. Hypersonic flight, so flying from Toronto to Japan in 2 to 3 hours instead of 14 hours or so, is going to be a $270 billion opportunity. We believe that space tourism is going to be a very small business relative to those opportunities. And Trimble, it's interesting. From space, we're going to be able to change the way, to change agriculture, increase productivity, help drones understand where to fertilize or how much to spray. So I think that the first opportunities are more lower Earth or lower orbital opportunities as opposed to the distant orbital opportunities.